Here are 10 tips for the new cryptocurrency investor. Make sure you watch till the end of the video because I wish someone had shared these tips with me because it would have saved me a lot of money. I would like to thank Aave for sponsoring this video. The money in your bank or under your mattress loses in value. That's why you need to meet Aave. Aave is like your bank in the DeFi space where you can earn high interest rates by lending your crypto in a permissionless savings account. At the moment, I'm earning 5.6% on my funds on the Aave platform. It's super easy to use. With an Ethereum wallet and just a few clicks, you can start earning high interest rates on many different cryptocurrencies. Try out the Aave platform by clicking on the link in the description below and start making your money work for you. The first tip is invest only what you can afford to lose. But it's okay if you're young to go into a little bit more risky investments as long as you don't overdo it and you don't go into debt. Make sure you always have a safety net and a job that pays the bills at the end of the month. But definitely don't take out a loan. I've seen too many investors get completely wrecked because they get a massive loan, buy some crypto and the market crashes in the sale at low and they've still got this loan that they have to pay back. Always do your own research when buying into a new coin. I think this is incredibly important and not for the reasons why you might think. The reason why I think doing your own research is important is because if you've got a very strong understanding of what kind of pain point a certain project resolves, then it makes it much easier to hodl through the bearish phase when the price drops by quite a lot. Most investors that don't really understand the strong fundamentals between one project and another project, they end up selling at the bottom because they don't see the big picture and what kind of pain points a project is trying to solve. Veteran investors had to suffer massive, maybe 50, 60, 70, or even 90% losses during the crypto winter from 2018 to early 2020. Some of them managed to weather this crazy depressing phase because they believed in the strong fundamentals of different projects. Those with weak hands probably didn't do their own research, and that's why they didn't keep on hodling. If you like this type of content, then make sure to subscribe, or just don't subscribe if you don't like money. When investing into newer projects, make sure you've got a stop loss in mind. Now, you might be wondering why stop loss if I just mentioned before that you should hodl. Well, hodling is basically for larger market cap coins where you know they've got very strong fundamentals and you want to keep them for several years. Now, with low cap projects, you never really know what kind of team is behind it and if the fundamentals are really great. Now, the thing is with losses, the larger the losses, the more gains you're going to have to make in order to break even. With this chart, hopefully it makes it a lot clearer. So with minus 10%, you're going to have to make 11% of gains to break even. At minus 20%, it's 25%. Minus 30% is already 43%. And at minus 40%, it's starting to get tricky with 67% gains in order to break even. And at minus 50%, it's already at 100%. Now, what actually then starts to get scary is having minus 60%, minus 70% losses. Because, for example, with minus 70%, you're going to have 233% gains to make back your losses, and then you only broke even. With minus 80%, it's 400%, and minus 90%, it's 900%. Now, you might be wondering why I'm sharing this with you is because during the bear market of 2017, many people, they had like altcoins that lost 80, 90, even 99% of its value. Now they're hodling these losses, and to break even, they're going to probably have to make 800, 900% gains just to break even. And making 900% on the coin is extremely difficult. However, making 25% profits on the coin is extremely easy. So that's for that reason, make sure you place your stop loss maybe around 40 or 50%, and then just decide to cut your losses on a low cap coin there. And you can always try and find another low cap coin to hopefully make back those losses, as it's definitely a lot easier to do 67% gains or 100% gains on a newer coin, but really difficult to do 900%. Tip number 3, diversification is key, but do not over diversify. I think it's very important to have a well-balanced portfolio with the vast majority of your portfolio in high cap coins. I know it's very lucrative and enticing to seek out the next 1000x or 100x or whatever. Make sure a larger part of your portfolio is balanced among maybe BTC, ETH, ADA, Chainlink, and top cap coins. Too many times that an investor actually falls in love with a project and decides to go all in into one coin or another coin, and he ends up being wrecked because you can never really know if a project is actually going to perform well in terms of price. And you don't only want the price of a project to increase, you want it to increase in terms of BTC or ETH valuation. If it doesn't increase in BTC or ETH valuation, then it would have made more sense just to hold BTC or ETH. If you're new to the cryptocurrency space, the best bet is just buying BTC and ETH. Don't leverage trade. The cryptocurrency space is risky as it is. Don't try and increase your profits overnight. Getting rich quick is the fastest way to get wrecked. The markets are highly volatile. Entering into long or short positions will be the fastest way that your portfolio actually goes to zero. So if you actually really want to trade, then only trade with a smaller amount of your portfolio, maybe less than 1%. But in my opinion, stay away from leverage trading, especially if you're new in the cryptocurrency space. It's really important to keep your emotions under control. Do not panic during the dips. Very often 25, 35% dips will happen in the cryptocurrency space as it's incredibly volatile, but you should actually remain stoic. Delete your portfolio tracker app from your phone, take a walk outside, enjoy the beautiful weather wherever you are, and just ignore the cryptocurrency market for a few days. Come back and actually see what happened. If you do not control your emotions, your portfolio would definitely suffer as a consequence. I only sell on green candles and I only buy on red candles. That's the easiest way to make sure that I'm not letting my emotions control the way that I trade. Time in the market always beats timing the market. I definitely do not recommend trying to sell the top and buy the bottom. Dollar cost average buy to enter into the market, dollar cost average sell to exit out of the market. Furthermore, never touch your HODL stack. I think it's incredibly important to always have a little bit of skin in the game because that also reduces your fear of missing out when the price continues to go up after you sold a little bit of your crypto. Do not fall for scams. As soon as money is involved, you're going to have a lot of people trying to contact you. So there are many different scams in the cryptocurrency space. First of all, if someone contacts you and tries to offer you a service, very often it's a scam. They might want you to buy a token. They might want you to participate in some kind of a trading scheme. Definitely do not fall for that. There are also the giveaway scams where you got like these ads in front of videos. People will place these ads there and they tell you, oh yeah, send like 1 for 1 BTC and you get the double or even the 10x amount back. No one's going to give you free money. That's it. You can't go onto the street and then tell someone, hey, here's $10 and you get $20 back. The same goes for the cryptocurrency space. No one's giving free money away. You've also got phishing scams, where people will send you an email with a link that looks like a link from a website. It might be a wrong link, and when you log into it, then you're going to actually put all of your information there, and the scammers can actually steal all of your crypto on that exchange. You've also got SIM swap scans, which it's quite difficult. It's basically if you've got the two-factor authentication as a SMS on your phone, I definitely do not recommend that. But I do recommend installing two-factor authentication on your email account, your exchanges, and also make sure that you don't really talk too much on the internet about owning any cryptocurrency. Last but not least, keep your private keys safe. Your private keys are the most important part of your portfolio. If you lose your private keys and you lose maybe your phone or your laptop or your hardware wallet, then there's no way of recovering all of your cryptocurrencies that you've maybe stored on a desktop wallet or a hardware wallet. Just try not lose your cryptocurrency private keys in a boating accident, as that would be definitely very unfortunate. I hope you enjoyed these tips. If you've got any questions or you've got other tips that you'd like me to know about, then make sure to post them in the description down below. Make sure to subscribe, or don't subscribe if you don't like money. Either ways, I wish you a fantastic day. I'll catch you in the next video. Have a good one. Bye-bye.